Kubi, are you surprised that the market is trading flat today, just a day after we saw those interest rates going up by 25 basis points to 6.50%?
Hello, Godfrey. I'm not actually too surprised because it had been predicted, analysts had predicted last week that there'd be some type of profit taking because of the bull run. We've had a bull run for a few days. We've had a bull run since the beginning of 2011, and profit taking was expected at some point. So maybe between today and tomorrow, market will trade flat, go slightly lower, just while investors take advantage before it starts to pick up again. But broadly speaking, we expect it to continue rising.
So today, where did we see that market being taken, that money being taken off the table? I would imagine the banks would have been amongst those that came under pressure.
Yes, that was exactly what happened. A couple of the top banks lost a few kobo on their shares. They've been rising. They've had a pretty good week. So we see a little bit of profit taking there, and then in the manufacturing as well.
Yeah. Now, given current valuations, what would you say the market is saying about where the interest rates might likely go in the future? In other words, are we likely to see perhaps the banks weaken if the perception is that with the central bank raising rates, those rates are likely to continue rising and therefore bringing pressure to bear on the banking sector?
Well, I think the banking sector is well equipped to take the pressure. In fact, what we've looked at from what happened yesterday, it shows that CBN feels that the actions they've taken in the past 2 years have stabilized the economy. The system can take it. There's been enough liquidity. We saw the AMCON bonds in December, and from what we can see, increased government spending, there's enough liquidity in the system now to take monetary policy back to the kind of regime we saw more than 2 years ago. There's been increase in rates on the CBN side. It's generally going to have a slightly higher impact for the banks and for the general market, and we also see pressure on the deposit rates and the lending rates in the environment. Yeah.
What's your perception, though, for interest rates going forward? Because apart from the increase in the MPR yesterday, we also saw the central bank tightening other measures to try and rein in on liquidity, the ability of the banks to lend. What's your expectation for monetary policy going forward, and what impact do you see it having on the banking sector in particular and on the overall market?
Okay, direction of interest rates. Interest rates will probably continue to rise, at least for the first half of the year. And we say this because we have elections coming up, and we expect that CBN will maintain this monetary policy, a tightening monetary policy, through the election period and thereafter, because we need to keep a check on inflation. We're targeting single-digit inflation that has not been achieved, so some slightly more drastic measures need to be taken for that to occur. At the same time, for the banks, yes, the banks will increase rates. What we are likely to see, because the CBN sovereign rates have been going up, we're going to see depositors benchmarking the price of their deposits to those rates, so there will be a rise on the deposit side. Interest rates to lenders, on the other hand, did not soften as much in 2010 as the central bank would have liked. So therefore, there's going to be a lot of resistance from borrowers. So bank lending rates may not go up in the same proportion as the deposit rates. What this translates to is shrinking margins. So net interest margin for banks will be going down, but that shouldn't overall threaten the top line.
Yeah. Now, we also saw yesterday the central bank pronouncing, the governor pronouncing on the naira exchange rate and saying he was looking for a stable exchange rate. And today we're seeing that naira slightly firmer against the US dollar. What is the market reading into the governor's comments yesterday on the naira?
Well, the governor's comments remain consistent. They've been consistent since he assumed office. He has always consistently promised that there would be a stable exchange rate regime. We closed 2010 stable, well within the 3% that he had promised, and we have opened 2011, we've opened stable again. There was a bit of pressure at the very beginning of the year while importers were covering orders at the beginning of the year, but since then we saw an appreciation today of 9 kobo. We saw an appreciation last week of 1 kobo. So overall, naira has remained perfectly stable, and we believe that with what has happened on the interest rate side, they will be able to exercise some control on the foreign exchange.